You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Everybody, welcome back to our continuing coverage here from the Options Industry Conference 2024, coming at you from scenic Asheville, even though I wouldn't know anything about that yet because I've been in this room and will be for the next few days out there. But the room is lovely in and of itself here. But of course, we're down here for many reasons, to get all that great panel content for you folks to catch up on. So maybe you miss a session, maybe you can't come down to the show. Well, don't worry, we've got you covered. And also to catch up with a variety of different people from the world of options and indeed beyond, to pick their brains on some of the hot button issues that you folks, we know, are obsessed with these days. And let's dive right into it with our first guests here today. We've got a double dose of Jims, Jim squared. First off, we have Jim Toes. I didn't even have any cigars. Jim Toes, the president of STA. Jim, welcome back. It's been a while, sir.
Thank you. Thanks for having us back. It's always nice sitting down and speaking with you, giving an update to your audience on what's going on in STA land.
And also joining us for, I think, the first time here on the network, Jim Part 2, Jim Hyde, the chairman of STA, also the head of strategic partnerships and business development over there at NYSE. Jim, welcome to the Options Insider Radio Network.
Thanks for having me. It's always a pleasure to hopefully share some insight. And for folks that couldn't attend, you do a great job always. And a lot of great feedback on the follow-up, and folks that do miss panels. It's nice to be able to just grab all the content, almost like a little quick cheat.
Yeah, we are. We're like the big gravity well. We suck it all up, and everyone can catch it at their leisure. Like, I want to go head out later to Henry's panel, but I may not make it, so I can listen to it on my own network, which makes it a lot easier for me. But let's get into the fun. Jim, you've been on before. Jim Part 2, we'll call you. You have not. But we have a lot of new listeners, even since the last time you and I chatted. We're obviously down here at an options conference. Jim, you represent Securities Traders Association. So some people might be asking in the audience, why is STA at an options conference? Let's start there.
Oh, that's a good place to start. So, we've been around for 90 years, and to your point, our history for the first call of 75 or 80 years was in the equity space. So we had a lot of market makers, clients, buy side, sell side, broker dealers, exchanges that are in the equity world. Now, as you know, Mark, we have a lot of affiliates in various cities like Boston, New York, and Chicago, and Dallas, and other places. Our interest or where these two paths cross of options and equities really kind of came from the Chicago affiliate, where there was a lot of members in Chicago that were in the option space, and really what they were seeing and what we were hearing was that there were a lot of changes that were happening in the equity space as far as how stocks get traded that was having an impact on the options world. And they didn't feel that they were getting the information, number one, and then two, that they had a means to express their views or opinions on various market structures. So that's kind of the background of it, is that, the diversity of the organization geographically and asset class wise, that there was this huge, marketplace in options that really were not, they were being a second thought in the eyes of the regulators that when they were making changes to equity market structure, the impact that it would have on how options get traded. So that's the short history of it, and so we decided to get more involved in the space. But I'm going to have Jim maybe talk a little bit about his history, because as you know, in any business, taking ground is always easy, always easier than holding it. So, we made a decision 7 to 10 years ago to be more involved in options. Rory O'Kane was the STA chairman back then out of Chicago. But it wasn't just like a 2 or 3 year thing, flash in the pan. We've been able, the effort today, because of people like Jim and others, is actually bigger and stronger today than it was when we first started out.
Yeah, that's a nice segue into what Jim, what you just referenced, and it's probably the foundation or that starting block of STA's involvement with a conference like this and in options in general. And it really speaks to what SIFMA's option committee had been doing for years, and then ultimately, as you referenced, Rory O'Kane, I think, was the first chair to come from the option side of business, and that's what, 90 former or 88 former, whatever he was, 6 years ago. It's now our 92nd conference. So I'm happy to be the second one in. And one very important milestone for STA and the Listed Option Committee that I was a big part of, and Jim, with all your support and the industry in general, it was something that was needed to have happened for several reasons. The number one, unfortunately, is for regulatory and antitrust concerns. Whenever exchanges are in the room, and unlike SIFMA's option committee, the STA option committee is actually has, I believe now all members of exchanges are represented. And I think we had like 40 folks in the room representing the clearing side, the market making side, the bank side, retail, institutional trading, and the like. So we have the right mix. We were the foundation of the LOMSWAG, the Listed Option Market Structure Working Advisory Group.
Say that one 5 times fast, I do.
No one likes to say it more than once, and I'll be in that camp. But I think that was the most important foundation that really was set, and probably the primary driver for why we will always be out at a conference like this. We are a big part, and especially for the foundation that we built for LOMSWAG.
Well, we polled our audience before we came down here. We said, there's a lot of hot button issues facing the world of options right now, but what is top of mind for you? What should we really focus on down here? They hit on 2 with a bunch of extra write-ins. I bet you guys can probably guess what they are. Go ahead, hazard off a guess. I dare you. What do you think are the top 2 issues they want us to talk about down here this year?
Zero DTs.
Yeah, probably. There you go. You've been around a little bit.
And remember, we don't like to call them zero dated.
That's right.
I know that is a bugbear. I've had many exchange people express that same viewpoint to me. Not zero DTE.
You have to put $1 in a jar if you mention zero.
For our purposes here today, we will lump them all under the umbrella of zero DTE. But we'll start there. 75% of our audience, that was the main issue they wanted. So they are, interestingly enough, even though our audience is very split on this, we have a lot of very savvy options people in our audience. A lot of them are a little reticent on the uptake. They're not all completely embracing these things, but the fact that they all want to talk about them still does show that they still have a lot of impact out there. We just a couple of weeks past the 2-year anniversary now. I think it was April 18th when all this madness kicked off. This, whatever you want to call it, the zero DTE revolution, for lack of a better word. I think we talked about it at the show a couple of years ago when it was coming. It was kind of just a footnote. I didn't really think much. I don't think anyone really thought much about it. You're just kind of completing the calendar. You're adding the 2 days that were missing. We've had weeklies forever. They have expired on that same day forever. Not a big deal. But yet, for whatever reason, the addition of those 2 days just was a catalyst that unleashed this wave. If you had told me 2 years ago that it would be 50% plus of SPX volume every day in just 2 years, I would have said you were an absolute crazy person, yet that is where we are today. So I'm curious for you, even with our own audience who are very deep down the rabbit hole, they are a contentious issue. Some people think they're awesome. They love going home flat. They think they're a great speculative tool, hedging, whatever the case may be. The other half thinks they are, we jokingly refer them to a network as gamma bombs. They're just waiting out there in the ether to blow up at the worst possible moment. So I'm curious, from an STA perspective, where do you guys fall on this? Are you yay? Are you nay? Are you gamma bombs? Are you great tools? Where do you guys fall as an institution?
So I mean, first off, I'm an equity guy. So options people always get nervous when I start opening my mouth and talking this in the weeds on options here. But there are certain characteristics that Listen, I know time equals risk, right? So the fact that these are short dated, that maybe take some of the risk out of it, the time risk that maybe comes with them. They obviously are very popular with investors, as you pointed out, with the volumes around it. But I think, listen, they are new, right? And I think the strength of the organization here is that we're able to kind of get all the market participants who are creating these, from the market makers to the exchanges, also to the broker dealers, have the clients that are trafficking in them, to be talking, amongst each other to kind of understand it. Because I think right now we think that there is still, believe it or not, for as much as they're being discussed, I'm not personally confident that the regulators and maybe press people, with the exception of yourself, that are really understand what it is. So I think number one is just it's an education that still has to be done around this. I mean, I'll let Jim talk more to the products themselves, but listen, investors are finding these things very attractive, and not investors of all types. We kind of see it as our we're not going to pass any merits on whether they're good, bad, or indifferent. We just want to make sure that the information that's out there in the public domain is accurate, that people who are, whether they're a market maker, an exchange, or a client, that they understand what the risks are around this, so they can make their decisions around it, and the transparency that comes with it as well. So that's kind of where we feel like we sit. We're not here to pick winners and losers and what's a good asset and what's not. We just want to make sure that the information that's being put out there is accurate, and that the participants, all the parties that are involved, are talking amongst themselves, because these things may work for one segment of the marketplace, but they may be causing some friction with another area of the marketplace, and we just want to make sure that those two entities are in the room kind of talking amongst each other, so they can kind of figure this out to get us in a good spot.
Yeah, Jim, same question for you. As other Jim alluded to, you've been in the exchange game for a while. I believe you cut your teeth as a market maker. You can correct me if I'm wrong. So you can look at it from a couple of different perspectives. Where do you fall on the great zero DTE debate? Dare I say it, the great debate of our time, Jim?
You owe another $1 that was zero dated, so you got $2 in the jar to add. But just to add, and I think this is the primary reason why what I'm about to say is why 75% of your listeners, those are folks that are tuned to options. They get it. They're not new to the game, and if they are new, they want to learn fast. Right? These are excited, times for everybody. COVID, maybe the only good thing that it did is allowed people to get behind a screen that may have had a little more bandwidth. You weren't able to even leave the house, for God's sakes. But at the end of the day, we have what we have. We have 40+ million contracts trading a day, and when you ask your listeners and they reply the topic to be discussed, 75% of them are saying the number one topic is short-dated options. And I think the real reason is, yes, they were here and introduced some 2 years ago, but they were very much ring-fenced by design. It's a different rule set. I won't get weedy on it, I promise. But they're always ETFs. They are not single names. So if you think about someone who's looking at NVIDIA, Apple, any single name that trades that kind of volume and saying, well, I could trade SPY zero dated, okay, QQQ, I said zero dated, there's $1, Jim, sorry about that. But the short dated options on single names, it's a debate within the industry. It's been going on for years, and I truly believe through LOMSWAG, which is the right place to funnel the efforts, they had their first, I believe, single topic meeting not too long ago. It was hosted in Dallas, and they came away with a bunch of work in progress, things to think about, because I could tell you that for sure there are things to be addressed that don't apply to ETFs that are absolutely need to be addressed, and whether there's workarounds or not, or whether they need to be just omitted. And the best example is probably just simply not listing a short-dated option on something like Apple on, I believe it's Tuesday, might even have been literally today, earnings announcement to come out after the close. That's a whole different trade. It's a different risk profile, probably margins different, probably on the clearing side, on all the stress that goes into the system when you introduce something new. It's probably exaggerated in that equation. But the industry is stepping up. They're addressing it. And there's no verdict yet. There's no hard line or no bright lines as to what can and will be done. but I could tell you it's being looked at, and I wouldn't be surprised if in some period of months, probably not years, you see maybe a test pilot, maybe something forward, very understanding of and addressing as many issues as you can that come up in like a single topic round table with professionals from every side of options, clearing, market making, institutional, exchange, et cetera, all on that round table.
Wow, months rather than years. You headed me off at the pass with my next question there. That's, of course, the other question we receive quite a bit is, why can't I do this on your Apples and your Teslas? Yes. And you just laid it out very well. We've heard a lot of different viewpoints on why that can be, but I was not that optimistic hearing these different viewpoints that we were going to see them anytime soon. But it's like months rather than years, Jim. I think that will be music to the ears of a lot of our listeners, sir. And if that doesn't come to pass, they will hold you accountable. So just be prepared. We'll share your email at the end of the show, and they could reach out to you personally out there. But that's fascinating. I think that alone will go a long way. One more other question on the zero DT. We had a couple other people on the professional side reach out as well and say, all this 0-day retail stuff is
That's
fun.
$2.
We'll have a jar at the end. We'll settle up at the end. But they also want to know, are we seeing any interesting impacts or surprising impacts on institutional flow? Because obviously half of FCX flow being short dated, that's not all mom and pop one lots. That's big funds. And so they're obviously seeing a use case for that. They want to know, is this changing, or perhaps, when we saw the flow from monthlies into weeklies, it kind of impacted the way weeklies performed a bit. Are you seeing any interesting shifts in the way institutions are adopting these things, Jim? Either Jim.
Well, I'm sure. Listen, there's a certain capital efficiency with this product as opposed to the underlining. It's another. Listen, every buy side firm, every large buy side firm has a quantitative strategy. Either it's an overlay or it's a separate fund that is running these quantitative models. And these are liquid products that are enabling them to hedge positions or get exposure to on an opinion in a more capital efficient means. So, what works for, usually when you see like a real bifurcation of what retail likes and what institutions like, it tends to be on retail like small stocks that with the smaller cap names. Large institutions don't like to really play in those smaller cap names because there's not a lot of liquidity on them. They can't buy enough to really move the needle on performance, and then if something goes wrong, they can't get out. But this is really not the case with these products, right? So whatever the retail investor is finding attractive about it, the institution is finding that attractive as well. And they don't have to deal with the liquidity issue that maybe they might be facing with this small cap security.
Well, Jim, usually when you and I sit down here at these conferences, we go deep in the weeds of options, but I'm pleased to say the other thing that a lot of our listeners chose, it was a distant number two, but still number two, somewhere around 22%, is right in your wheelhouse, which is, of course, the hot debate going on in the stock world right now. NYSE debating it, SEC debating it. Should stocks go effectively 24 hours a day? I was surprised. We polled our audience on that, too. And they were almost about the same level, somewhere around, I'd say about 65% against it, which I was kind of surprised by that. But this is obviously deep in your wheelhouse over there at STA, Jim. What are your thoughts from STA on all these proposals out there? And do you think, at the end of the day, stocks should be 24/7 or maybe 24/5, however you want to look at it?
You want to go first? You want to go?
I know NYSE put out a survey. I think that sparked some interest, and that was right on the heels of a survey around what other topic right before that, probably, I think 6 weeks earlier, we put out a survey on short-dated options in the equity space, in the equity names. So we kind of hit the two, which is really nice on those two surveys, and I'll put my plug in for NYSE, well-deserved. I mean, they did it right. It got people thinking. There's no opinion out there from us on either one of those topics. 24 exchange, others are, kind of, that's their focus. I think our survey was meant to do something good for the industry in a sense that just bring it to the forefront. And to have your listeners nail down those two particular topics is nice, no pun intended. But I would say more to come for sure. And again, I think just like the short-dated debate that's out there. It's a very healthy debate. It is surfacing topics that I personally, as you mentioned, I cut my teeth as a market maker in the XMI pit and over on the Amex. Always had my own trading firm, and it's near and dear to my heart when you see product and good debate around product and new product being able to launch. Kind of reminds me of like the Amex launching that first ETF, which people forget, which was SPY, and it's the granddaddy, as they say, of all ETFs. Nice to see.
Yeah, I mean, so obviously this topic comes up, and it really is. I would be curious if you, when you did your survey, if you had asked the respondent to put their age. Like, are you under 29 and a half or over?
We did not, no.
Okay, well, you should do that next time, right? Because, I mean, some of the stuff that we've seen from some of the broker-dealer clients around this, obviously, is that a lot of the people who find the 24/5, whatever it is, at least initially from the retail, they were crypto investors first, right? And that was their first. And they don't understand I don't want to call it nuance. The major differences between being able to trade crypto 24/7 and in equities, which is 5 days a week, 9:30 to 4 type stuff. The typical hours where stocks trade. So I think that this is. It is here. It is here now, to a certain degree. And now I think it's our responsibility here to make sure that that these new investors, when they're coming in, or even the older ones, there's transparency around it. That they realize that they're buying or selling something that is off exchange hours, and just to make sure that they're aware of that. But to your point, though, there's a lot of the legacy players. They're kind of fighting this because they're legacy players and they're large, and for them to make changes and moves, it's like a container ship trying to make a U-turn on the Hudson River. It's very hard for them, where some of this is one area maybe where the smaller players, newer entrants with different technologies and a different client base, that they're able to meet the investors, satisfy the investors in this area. But, it's here. It's here. And then the buy side, as far as the institutions, I think they're probably going to get pulled into it begrudgingly. Because as liquidity kind of builds in these off exchange hours, they're going to be forced to go there to try to tap into it, and they're trying to figure out how to do that now.
Yeah, Mark, I was surprised that the number 2 item to be focused for your listeners on obviously the Options Insider would have been the physical settled Bitcoin ETF options. Why are they not trading?
I was about to get there. You're reading my mind here, Jim. It's amazing you haven't been on before. We're simpatico today. But yes, that was a very popular write-in selection out there. So you work with the regulators. Obviously, you work on the exchange side as well. If you can give our listeners any update on that, they would appreciate it.
Yeah, I'll make a bold prediction. I think the reason why it didn't make number 2 is the fact that 24/7 would have an impact on options, and I don't want to comment on that. I don't want to get ahead of the team, but there's probably a lot to think about. I'll leave it at that, and that's why your listeners, in a very smart way, have it on their radar and they're conscious of it. So I'll give them a lot of credit for pushing it up to number 2, because trading the long-awaited, think about how long it took to get the approval on the ETF side just to have the physical settled ETF, and on all that debate. And it finally did start to trade, and obviously it looks like a very successful product. So I'll be short here. I won't get too weedy. But at the end of the day, GLD is probably the best example and probably the first, I believe. I think that was an Amex filing, if I recall. And it needed what we call, quote unquote, a CFTC OCC handshake, which, without, again, getting too weedy, there's a lot of things that OCC needs to do to have a product clear, trade, and be able to be listed from their side. Exchanges have to make filings. So fast forward the tape, the filings from all exchanges, all the different variations are in, which is good news. But unfortunately, much like, again, 2 great examples, palladium and I think platinum, 2 metals that have a physical settled ETF and don't have the options yet because they don't have such the handshake. So more to come on that, a work in progress to say the least. And I'll make a bold prediction here. Unfortunately, I think that timeline to when you see listed options on those ETFs is going to be measured in years, not months.
Yeah, people got to realize, we're the only country out there that has two primary regulators in the trading space. The SEC and the CFTC, and they like to compete just like broker dealers like to compete with themselves. And I don't think this is necessarily an area where maybe one regulator wants to give up any, provide some type of no action, and then by doing that, they've kind of removed themselves from the regulatory oversight on this. So. I agree with Jim. I don't know that, and it is unfortunate because, listen, we like to have the beauty about options that we always talk about is the fungibility of it. That it can, you have an underlining anything, and you can have an options trading on it, but it's going to be a while, I think, before this gets sorted out.
That's surprising. If I had come into today, if I had taken the odds on which one would be months rather than years, I probably would have said the Bitcoin ETF options, and I would have said the other would have been years rather than months. So you're giving me an interesting viewpoint here, Jim, which is fascinating. But we'll get out of the regulatory minutia weeds and get into some fun stuff here before we wrap up. You guys have been busy over there at STA making some interesting changes. You for years had your big market structure event in DC. I went to it a few years ago. It was a great event, but you're moving things around now. Literally, you're moving it to Orlando, also maybe changing it up a little bit. So give our listeners an update. What's going on? What are these updates or what are these changes you're making over there at STA?
Yeah, so I'll let Jim talk about the September event. But what we wanted to just try something different. We like you pointed out, our big event has always been in Washington, D.C. in October. And something that we've kind of that we were kind of frustrated about is that we try to hold ourselves out as a grassroots organization that has decent access to congressional staff members on these things that provide oversight of the SEC and the CFTC, and to hold yourself out like that, and then you have your big conference and you can't get a congressman to speak in October, is because in October they tend not to be in session, right? So they tend not to be. It's very difficult to have a congressman come speak at your conference when they're in Michigan and your conference is in New York or something. It's very difficult. So we were kind of like that's really was the main catalyst. Should we be moving this event to a different time of the year, the DC event, to a different time of year where we know that congressional members are in town, and then our ability to get speakers is easier. And then that was kind of coupled with the fact that hey, can't we do this someplace where the weather's warmer and it's nicer? Listen, we're at a beautiful place today. So this year, this year was we did experiment with it. I'll talk about the April event. So we always want to do. We never want to go a year and not do something in DC. That would be really foolish for us not to do that. So we did an April event, which was okay. I would give us a B+ on it, where we did have some congressional members speak at it, and we had a regulator on it, but it certainly was not the size of what we usually have in October. So we're going to tinker with it. We're not going to make any decisions as far as long term. We know what the April event looks like, and Jim can talk a little more about the September event, and then we'll make a decision at the end of the year as far as what the long term strategy is.
Yeah, it'll be our 91st annual Market Structure Conference held in JW Grand Lakes, Orlando, September 18th to the 20th. And I did make two predictions. They're my own predictions. I won't make this one, but I'll tell you, if I were betting, I'd probably say there'll be more than 600 folks registered and attending. So if you went a couple of years ago with us, that was probably 500 high watermark kind of numbers. But I will tell you, and it's great, and it speaks to the strength of the industry in general and in options in particular for sure, is the Staney event had 480 registered guests. This event, I think, is pushing about 400 as well. Those kind of numbers really get you back to credit crisis 08 kind of numbers and growing. Not proportionally in line with, unfortunately, with the option volumes themselves, but that's a little bit on a tear, and it has settled. It kind of looks like it's finding its happy place. And with that, I will tell you for sure at that event in September 18th to the 20th in Orlando, we will have an option panel for sure, and look to hear topics, everything from the opera traffic, position limit type changes, just things that are like top of mind and very weedy. We like to give everybody a taste of what they're come there for. And again, as Jim Toes pointed out, the organization primarily in its history, STA, has primarily been driven by, at one point, the buy side, one point, the market makers, all on the equity side. Exchanges got involved halfway through, whatever that was. But options are clearly a big part of STA. You are a big part of options in general, and we appreciate all the support.
Well, I appreciate you two taking time out of your day to join us, give our listeners a little bit of insight into what's going on over here. And if they want to learn more about your upcoming October event, where should they go? What should they do?
SecurityTraders.org.
There you go, SecurityTraders.org. Gentlemen, thank you. And we'll look forward to maybe catching up with you again down there in Orlando in October.
Thank you.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.